Hey guys, what's up? Stock Retail coming back to you. Second time in a day. We had that earnings call, and I am through the roof, over the moon. Very happy, very honestly giddy about how great that call was. Picture me applauding Adam, Sean, and the team. Loved that earnings call, and I just decided, you know what? If you're on X, you see that I live tweet it every time, and so you would see a host of posts every time we have the earnings call. But I decided, you know what? I actually want to treat this almost like a live stream. Obviously, it's not. I'm recording, and I want to go ahead and review the earnings call. And I want to just tell you guys why I'm so mega bullish coming off that call. What had me so excited? And so I'm going to try this a little differently. We're just going to go ahead. Hopefully, you are going to see my screen. So I'm going to go through um, these, these earnings tweets that I do, or posts, I should say. I don't want Greg on my back. It's not a tweet, it's a post. It's on X, it's not Twitter. Anyway, so I'm going to go through these and just share with you what I heard in the call. If you listen to the call, I always say better to get it from him than from me. But now you can get sort of, if he's the play-by-play, I'll be the color commentary, or the analysis. But he's the source. Hearing from Adam, hearing from Sean, our CFO, that's far better. I would recommend that far better than hearing from me. But gosh, I was so thrilled at the things I heard. So I'm actually just going to go through these because it'll help me. And then that way I don't have to take time to prepare anything for you guys. I'll just talk it through. And I'm going to show you a little bit from some spreadsheets too, because I got a couple numbers I'm going to want to just have fun with here. Yes, you can have fun with numbers. And then also I posted that video earlier today and everything was right in it. But the way I explained the one chart in particular, I used the wrong language a little bit to explain that chart. So the numbers I showed you were right. No big need for correction, but I want to kind of correct the understanding of that. So, all right. So first off, let's just literally go through as though I'm just taking you through the earnings call. Adam leading off with looking ahead, versus using the rearview mirror. Of course, I loved hearing that. You guys have heard me use that language. I just think it's apropos. Listen, we know that Q1 was tough, and that's why I tried to prepare you guys and warn you. Anybody looking at that as our reality was kind of, in my mind, a distorter. And so we're going to get to Adam really underlined that as well. So whether we just think alike, whether he sees my work, it doesn't. Well, it matters to me, but I guess in a way I'm going to say it doesn't matter. But like, I'm just thankful that he's out there saying the things that I believe also. And so you're hearing a very similar message there. So he was discussing the current strength and the coming strength of the movie theater business. If you don't follow me on X, what you're about to see is I just literally tweet out these. I said tweet again. I post these things out as Adam's talking, and so I'm having to furiously type. So if you see a little more informal posting, you're going to see that. And then also this time, actually, literally, my daughter was driving us home. She had an appointment I had taken her to, and I let her drive kind of sort of a long way home to do a little bit of a country drive, get some more practice driving while I was like firing all these off. So that's going to be kind of funny to watch. But all right, so AA is still talking. He called it a dramatic reawakening of the box office that had begun. I really like that. He said literally booming. Of course, we love that language, talking about the box office booming. We're all excited for someday when AMC's stock price is booming. That was great to hear. So I'm gonna kind of go through this live with you, and I'm gonna have to remember as I'm sharing this with you. So just I don't know, sit back and grab a coffee or a beer or a wine or a juice or something, and go through these with me and listen to the earnings call effectively. All right, so AA was discussing Q1 and acknowledging how tough that was, and that's what we knew he was going to have to do. Interesting, I hadn't looked back. He shared that the domestic box office, hopefully I got this right, because again, I'm typing this live as he's talking. Let's show the rest of this one, was the lowest non-COVID box office since 1996. I've got to go look. I think it was actually down from last year. And then remember last year, we also had Taylor and Beyonce, which I talked to you guys in the Q1 earnings preview couple videos ago, that obviously made our ticket prices higher last year too. So it's just a tough first quarter all the way around. But I honestly think we're kind of done with that because, hey, actually, this is cool. Look at this. GameStop trending. This might be my For You trending, not the overall trending. I don't know. But kudos to you guys at GameStop. I'll have to check out later what's going on there. Um, all right, so I don't know. I just derailed myself, but just Q1 was a tough quarter. Oh, I think I've shared with you guys, like, if you think back, remember COVID lockdowns, we shut down the entire global supply chain. And then when you reopen, we had all these like supply hiccups all over the place and even some demand shock. What'll happen is I liken it to if you ever turned off the water to your house or your apartment or whatever, and when you turn it back on and you use the sink, the water's flowing, but then you get all these air bubbles you got to work out. I kind of feel in some ways like Q1 was an air bubble quarter as a post strike hangover. We had some recovery, but that was from, like think Q3, Q4 last year. There was like a host of movies that were ready enough that Hollywood could kind of push those through the pipes. And so we had some good quarters there. But then Q1, we kind of took a step backwards again. But now, as you see, in Q2 that I've been kind of talking to you about, our industry recovery is fully here. And I don't think we have any more of those air bubble quarters coming. I think that is behind us. And you're going to see throughout the rest of this earnings call review that, man, it was bullish. And I just loved it. So he says, and I like sometimes when he turns a phrase, he said, in brilliant contrast, the rest of the year looks amazing. He said he believes the total year will be at the high end of AMC's previous forecast. So I give you guys my forecasts for the box office. Obviously, they've got a team that has even more information than I do, more experience in the industry than I have. And so their internal forecasts, at one point he had said they'd be like, we would be half a billion to a billion above the full year 2024, I believe is what they were talking about. And so in the call today, he said, hey, we'll be closer to that billion above last year, which I think puts it, I want to say last year was around probably 8.5. I'd have to go, you know what, actually, hey, let's go check this. So I said this would be more like a live. Let's look. 2024 was 8.5. So yep, we were right about that. So, all right. So what Adam then is saying is he believes the AMC team believes will be at like 9.5 billion on the year this year. That's really close to my number. Currently, now don't hold me to this. I don't like usually showing you guys my numbers live because I tweak these and change these until I kind of, let's say, stamp them and put my name on. But right now, let's call it live tracking. I'm actually at 9.7. You can see here's 2025. I'm at 9.7 on my live tracking forecast. Ignore this 2026. That's not real at all. I'm just using kind of, that's a real rough forecast based on, I've looked at the list of movies, but there's not a lot of them. We don't have enough yet for me to call that a forecast. And then 2027, that's napkin math. So let me just hide those. Ignore the man behind the curtain on those ones. But anyway, so hey, 2025, I'm saying like maybe we're at 9.7. AMC's own internal team saying 9.5 at the domestic box office. So we're talking, like $1 billion bigger this year than last year. Meanwhile, AMC continues to improve its fundamentals, and we're going to talk more about that. So just a very bullish take. AA believes total year, I guess I already said that. Oh, and that 2026 will be significantly larger than 2025. I also believe that. I'm with him. If you just look at some of the movies we already know about, there is reason to be very, very bullish. So let's keep going. You're just going to see me kind of talking. You're going to see like these saying AA or Sean, because I want to just, for my followers on X, say who is talking. I guess you could kind of say duh to that, you guys. Anyway, AA discussing April box office doubling last year. We've been talking about that here on the channel and on my X. And then May, very similar. I kind of talked about that earlier today too, that just those were heavily strike impacted last year. And, very, very happy that we are way out of that. He turned another phrase. He said, for the rest of 2025, man, we have a lot of barn burners. And then he said something that I hadn't even thought about, which I just thought, dang, that's really bullish. Look at this. He referenced that in the next 11 weekends, we basically have 12 very large movies. And he was kind of listing off some of those. Funny, he called it Lilo and Stitch. And we all call it Lilo, but I don't know if that was for fun or if that's what he calls the name. But I just kind of smiled and liked that. So anyway, barn burners, I like that. We got a lot of big movies coming, in particular these next 11 weekends. Like, dang, you just say that out loud. Think through, like when we had Captain America, and then I know Snow White was a bit of a flop compared to what we probably all hoped. But let's say those were two bigger movies that came out. Those were weeks apart, right? And those were the only two for quite a while there. I mean, which is why Q1 was tough. But now Adam and team are saying, hey, for the next, 11 weeks, we have 12 big movies. That's just bang, 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 which I've been saying too. I mean, we just have no shortage of reason to keep going back to the movies. So that's just awesome. AA then goes on to say, all the way through year end, here he is. He loves his words. We will see a potpourri of huge movies. Couldn't agree more. Love it. I lost connection for a minute there. And then when I popped back in, he was referencing AMC having the industry lead in premium large format screens. So if you ever hear him talk about PLF, he's kind of talking mostly about IMAX there. But we're going to separate because we're going to talk about there's Dolby, there's IMAX. What else? We got, the XL screens we're going to talk about. So he starts listing a bunch of numbers by the end of this call. So hang with me. All right. So then he says, all right. So he gives this kind of overarching comment, which I think means we're probably getting to the Sean part of the call here in a minute. He says his overarching comment, anyone trying to draw negative conclusions from Q1 2025. Oh, when he opened up the meeting, I guess I kind of already said that. He talked about, when you're driving in a car, you look out the windshield. The rear view mirror is maybe insightful for learning some things, but it's not where you're driving. You don't use that to drive forward. And so I just like that because, like I said, that is a helpful metaphor and one that I use. So then he's drawing then on that metaphor that he opened off with, and he says, anyone trying to draw negative conclusions from Q1 2025 is highly likely to be mistaken. I think he's being very diplomatic there. I think often if you listen to his words carefully, you can understand there's something below the surface too. I've been trying to tell you guys, don't analyze things at the surface level sometimes. So he said, because we believe Q1 2025 would be a distorting outlier and anomaly. Now I smiled there because you guys have heard me use that language too. So again, whether we're thinking the same, whether his team knows about some of us apes, doesn't really matter. The point is just cool to hear similar thinking. And, I've told you guys about people who distort. So I do actually think he's flagging for you, people who point you backwards at Q1 and how that was, and try to get you to ignore how awesome Q2 is going to be. And in a minute here, by the way, you're going to see these guys were talking about the rest of the year too. And so I'm just very excited to share with you their point of view on the rest of the year, that it matches some things I've been telling you. And so if people are pointing you back, he's calling that a distorting outlier and an anomaly. Couldn't agree more, Adam. I love that. All right, so Sean comes up. Hopefully you all know, but that's our chief financial officer. Great to hear him share the numbers. That's a very important role for the company. Certainly Sean has had a big, big hand in, managing our liquidity, managing our solvency, managing our debt and our risk and our investments. Adam and Sean both talk later. You're going to see throughout this, talk in terms of our capital investments, our capital expenses. So Sean comes up. Now, usually Sean is the one who's going to start really reading off a lot of numbers. And so, again, I was in the car and actually I lost connection here once or twice more. So Sean, I apologize. I do try to keep track of the numbers you share. They're very helpful and I didn't get them all this time. So thank you though for all your work and for your team's work. So he says, anyone trying to draw, we're down here at Sean. AMC's business fundamentals did not decline as much as the box office declined. So you can see that I make a note. I've talked to you guys a little bit about this. When you have results that, let's say AMC grows faster than the box office, or in the reverse, when we had a box office dip, but AMC didn't suffer as badly as the overall box office, that tells you a little bit of something about your management team and their ability to separate from the industry. Like if the overall industry, I'll make this up, was down 15%, but AMC was down, 11%, completely made up number there. That's not, don't quote that. Then what Sean is telling you is, hey, we worked hard to try to have, offset the results of that tough Q1. And I applaud them for that. So then Sean goes on, profit per movie attender, don't miss this, is around 51% higher than pre-COVID. So that's something you guys kind of know about, but just good to keep seeing the results. And Adam's going to talk a little bit more about that later, as I recall. So we're going to see that in some of my posts. But the per person for Q1 was a Q1 record. So if we were to look at kind of ticket price plus food and beverage, and I don't remember now, this might have been when I was cutting out a little bit. Sean might have, I don't know if they're counting merch per person in that number as well. I have numbers in my spreadsheets where I'm just counting ticket price and food and beverage per person. But either way, the point is when someone comes to a movie at AMC, we're making 51% more now than we were in 2019, which is why I've always told you guys we don't necessarily need the box office to be at pre-COVID levels for AMC to actually even be a more profitable company. And Adam and Sean did remind us of that today too. So great to hear that. By the way, guys, I'm really going to get to some really bullish stuff coming. So I'd love if you'd hang with me and just treat this like a live and yeah, grab some AMC popcorn or AMC chocolate covered something and keep hanging with me here. So Sean was reminding us the team's been managing the total portfolio of theaters, right? So if you go back, like even the origins of my YouTube channel, I was walking through deep diving AMC's fundamentals and showing you that these guys have been managing the property mix. And so if you're closing down or selling off properties that aren't performing as well, pardon me, I'm going to take a little drink here. If you're selling properties that aren't performing as well and replacing them with highly profitable properties, then you just become a more profitable company. And so you can see Sean was saying, hey, in the last 5 years, this team, your management team, has closed 200 properties and opened 62. So that's a net closure of 138, right? Just the 200 minus the 62. And he was reminding us that the new locations are far outperforming the closed locations. You know, maybe you remember like the Arcana, the ArcLight. There's a few others that AMC has taken over, some really jewel properties. So just neat to see how we're doing. I am actually at one of those properties. Unfortunately, ours is not a jewel, and that is not AMC's fault. AMC purchased, there was a company that went bankrupt in late 2019, and AMC bought that property. I'm sure they got it for pennies on the dollar, so that's a great deal for AMC. It needs some renovation, and we'll get to that. But I mean, I'm at a suburban location, so I'm sure we're low on the list I'm going to talk to you actually about the Go plan here in a minute. Anyway, the point is, these guys have added properties, have struck very good deals that are good for us in terms of us as shareholders. And now as the industry is recovering, you're going to see some of these 62 properties they've opened really driving some fantastic results. Sean continues. So I had posted, and if you aren't following me on X, then you now know. So we came out of the quarter with about not quite 400 million in cash. You can see the number here, 378 million in cash here. I'm going to hide this. 378 million in cash. Now remember, I want to just really highlight this and underscore this. For the last few months, probably the last even 6 months, I'm not sure, I have been telling you we had enough cash to do the survive then thrive, as Adam has pointed us to all of this time. And there were many accounts on X, at least, and a few YouTube accounts I saw, who some treat as though they're AMC accounts, who were pointing at fear, pointing at reverse splits, pointing at dilution, pointing at cash burn, and just saying fear, 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 oh no, oh no, oh no, and constantly putting that in your face, right? It's okay for us to be mature and talk about the business, and I hope you see that I do that. And I acknowledged we were having cash burn in Q1. There was no way around that. It was happening. But I also told you we came into the quarter with enough cash. Remember the Goldman Sachs deal? We brought in more cash. Who knows still, perhaps we win that insurance case and get some more cash. You've heard me talk about that. And I told you we had enough cash to get through Q1, and I told you that cash flows are real time. So while others were pointing you to fear, I was pointing you to facts, right? What do I always say? Facts over FUD. And I said, we had enough cash to get through Q1. We're good. Well, we came out of Q1 with almost $400 million. It's cash plus cash and equivalents, or it's cash and equivalents of 378 million. Okay, now remember that I've said cash flows are real time. So April, we had a very robust box office. We more than doubled last year. And that means all of April, people were coming in buying food and beverage, people were coming in paying for tickets, and people were coming in buying merch, and we were selling popcorn. And oh, by the way, we have Uber Eats delivering food at home. And Adam talks about that in the earnings call. You can look forward to one of my posts talking about that here in a few minutes. And so here's the cash. We made it through Q1 with almost $400 million in cash. And now you know, in April, we have added to that cash. We had positive cash flow, which I had reminded you. Now watch this. Sean. And as you can see how excited I was. I go all caps here. I'm starting to yell. Boom, there it is. Sean, free cash flow positive for the entire final 9 months of the year. Suck it, shills. I told you so. I told you so. I told you so. I don't mind dunking on this. I'm very, very thankful for Sean and Adam highlighting this. I've been telling you the industry turnaround began in April, that AMC's cash flows would flip positive for the final 9 months. I've posted the charts, I've posted the forecast, I've shown you guys that the final 9 months was going to feel like a reality you have never experienced as an ape. You cannot find another time when AMC had 9 months of positive cash flows. Now, I want to just clarify something that makes this even more bullish. You're hearing me almost yell at you, and yes, I'm going to get even more bullish, and here's why. So I got to block a new person today because somebody then responded and said, "Oh, talking about positive cash flows and insult. What about earnings?" And I was like, "Oh, brother." So I checked their follows. They followed like 7 people who hate AA and me, so I just blocked them. That was on X. Let me explain to you that earnings, if I'm telling you we have positive cash flows, earnings are actually bigger than that. Our bottom line earnings include non-cash expenses. So what you are hearing is the final combined 9 months of the year are positive cash flows and most likely positive earnings. And I will continue to show you my forecasts. I have some mega bullish forecasts, and we're going to talk about why I am so happy too, of some things that got confirmed. But let's come back to that. So you can see in real time, I was like, told you, shills. And I want you guys, I want all of my followers to take note. Who told you fear these last 6 months? Who pointed you at splits and dilution and cash burn and worry, while I was sitting here telling you what was coming Q2? And you got to start deciding who you're going to listen to. But I'm going to just say I nailed it. Let's keep going. So Sean does say, okay, that's great. But hey, we are a sound management team. And he says, we'll continue to focus on liquidity and deleveraging. And so my note here is, hey, they've been doing this for years. They've been deleveraging us. Deleveraging just means getting to a better balance sheet, a better kind of asset to liabilities mix, lowering your debt load, and all of that. So they've been doing that consistently for years. I trust them. I'm just saying explicitly, trolls, go ahead and try me. But I trust Adam and Sean and the team. They are going to do what they said they're going to do. And so he's also just reassuring us like, hey, yes, we're doing much better. We're not taking our eye off the ball. That's what I'm hearing him say. So that's great. AA comes back on then and starts giving a bunch more updates. So let's go through these. First, he says, hey, it starts with our strategic playbook. Those are his exact words. The AMC Go plan. And he reminds us it was named that because we're going on the offensive. So GO, going on offense. This was really interesting. I noted in real time, I don't know whether intentional or whether he had a pretzel tickling his throat or what. I liked it. Let's put it that way. AA pauses. He says, it's time to move forward with big ideas. It's time to move forward. It's go time. So I liked that a lot. All right, so let's keep going. All right, so now he's sharing, okay, tell me more about the Go plan. He said something, now I hadn't typed this, so I'm going off memory. He said he was going to go a lot deeper. Something about going a lot deeper on the plan, and that's what he does here. So starting this year, we're going to further our lead in a big way. Okay, so he was talking about the PLF screens, the large format and the premium screens. And he said, hey, we've already got the most in the industry and we're going to extend our lead. Love hearing that. My kids really like some of the premium options at some local theaters. I think I've told you, just to be clear, they know we're an AMC house. I've told you now that I worked at Nike for 21 years. So they are used to being brand loyal. Like for 21 years, there was no Adidas in my house. Like there's no Reebok, no Adidas, no Lululemon. It was only Nike. Now, granted, I get half off of Nike for life, so there's a reason we have a lot of Nike, but it was also brand loyalty. And so they are brand loyal to AMC, but I told you too a couple times recently, like their friends were the ones organizing something. And if their friends liked going to some premium seats, I mentioned this property by us needs some work and it will get there eventually. But anyway, the point is there is a consumer for the premium seats. And so I'm proud of our team for having done their homework and for investing in that and putting us in the lead. So Adam, Sean, thank you. Appreciate it. I know you're doing the right work. So he says we expect to grow the PLF and the XL screens. We have more than 600 now, and I don't remember the exact timeline here because again I was in the car, but he said we get to more than 1,000 of those. So from 600 now, I mean that's like 40% growth, or sorry, bigger than that. That's like 67% growth um, in the premium screens. He said they'll be doubling IMAX with laser. Now, not doubling IMAX. I heard it as of the IMAXs, the ones with lasers, we're going to double those. So adding a lot of laser IMAX screens. Um, and they'll be growing Dolby by 25%, so that they'll be growing that by more than another 45 screens. They're going to triple Prime at AMC screens, and we're going to get to 100 of those. So you can see he was just rattling off just growth, growth, growth. We're going to be having a lot of premium screens at AMC. We just opened the new XLF or XL auditoriums in the US. You saw me talk about that in a recent video. So there were the two in Kansas. So he was sharing about that and how that's going well. Pardon me, I'm drinking a pop over here. Forgive me. I'm going to have another sip actually, though. All right. So as many as 50 or more of those XL screens by the end of this year. So I was like, whoa, that's a lot. Technically, I have one at our AMC, but I think Adam and team must feel that's a little different because that was legacy from this other company they bought it from. It's called GXL at mine. Maybe the XL thing is a little different, but regardless, you can just see we are investing in growth. There'll be maybe as many as 250 of those in the future. And I think he said there's already going to be, either there is or will be 65 of those in Europe. So just a chance for us to have, larger screen formats, especially for all of these action movies that are coming out. We got Marvel, we got DC is ramping up, Star Wars is coming back, Mission Impossible type of movies, Avatar. There's a lot of really great movies that are going to pop on those big screens. So that's what he was sharing about. Then also, you heard me talk about my kids and how they enjoyed the 40X screens. One of them saw Minecraft with that, and one of them saw Revenge of the Sith with that. That's kind of cool. And so Adam was saying we're going to be opening up as many as 40 of those. It's kind of cool. And my note, he's listing so many enhancements, screens, lasers, seats, and such. I can barely keep up. And I was just, honestly, here I was just getting happy. Like, man, AMC is just going to be the place to go for a long time, I think. That alone tells how much offense we're on. So go plan indeed. He talked a lot about these seats that we're putting in at AMC called Club Rockers. What he was sharing is like at some of the city locations in particular, we're getting such a high attendance rate that if you went to the full recliners, you would lose a lot of space, and so you would not be able to bring in as many people. So they've just done the economic analysis to sort of say, if we go to recliners, can we make enough money back, versus losing people? And they've said no, but so they found a nice option where they're wider screens, wider seats, deeper seats, more leg room and stuff, but not quite recliners. And he's calling those the Club Rockers. So it sounded like maybe, I don't know if we partnered with somebody who engineered those or designed those, but it kind of sounded like that's an AMC seat basically. So that's cool. Okay, so you guys know that we've had some updates to the Stubs premiere. By the way, really hang with me because there's some just really bullish stuff. I already talked about the positive cash flow, but Adam's going to hit some more about this too. And so AMC Stubs premiere has had some updates. Actually, so Stubs premiere is we've got this. Stubs premiere Go is a new level of A-list. It increases the rewards levels for, basically he was talking about if people see a certain amount of movies a year, you're going to get a lot more rewards. And I think it was a certain spending level too, maybe. The rewards will pile up faster. And that already has 300,000, actually more than 300,000 members in it. And that's a pretty new program. So you can just see how well we're doing at bringing in consistent, return customers. And so AMC A-list, you guys know we've moved from 3 movies a week to 4. So that's awesome to see, especially now that we have so many movies. He's expanded the age from 16. We've dropped the age down to 13. There's going to be some other kind of like ID enabled options that I think will just make it convenient. They've added A-list Classic, so that's kind of a lower price point. So he's offering the opportunity to, this is just kind of like price laddering and a way to capture more consumers. So there's a lower price point for guests who watch maybe only 1 movie a week, and also at these specific properties that I don't think that's what my property is. I think my property is a little bit above that, but I'm not at a premium property either. So anyway, there'll just be opportunities for people to, have a membership, but maybe not have to pay quite as much. But for us, that's great. You draw more members, you get sticky with them. Someone who's an AMC A-lister is not going to want to go to another brand theater because they already have their deal they're paying for at AMC. So that's what I mean. You get sticky with them. All right, so here's another boom. Adam, these are his words, called Q2 a breakout quarter. So again, I'm just like, told you, shills. I've told you guys, Q2 is amazing. I currently believe we're tracking towards 2.9 billion at the box office for the quarter domestically. We'll see. I don't recall Adam and Sean saying any real numbers on Q2, but he called it a breakout quarter. And I love to hear that. So you can look forward, I believe, to profits this quarter. Those are my words. I'm not going to put words in his mouth, but he called it a breakout quarter. And again, remember, they've said the full 9 months of positive cash flows, so that's great. He said, we believe that this is really great. I want you to hear Adam's words. Listen to this. We believe the tide has finally turned and that the future looks encouraging for an extended multi-year period. All right, so my followers know that I have been saying we are about to have a multi-year industry turnaround. So hearing Adam say that, I think one of the reasons I'm so excited is it's one thing if me, a dude on the internet, tells you this stuff. It's another to hear it from the CEO of the company. And when he is affirming this and saying, yes, guys, we're there, we're on a multi-year extended run, and Q2 is a breakout quarter, and we're going to be cash flow positive the rest of the year. And oh, by the way, we're improving all of these theaters in terms of seats and lasers and screens. Guys, your company is about to be a really, really good company, in my opinion. Now, I love his competitiveness, I'll even call it. As a manager, as a leader, as an executive, he says, hey, listen, I'm telling you a lot of really good stuff, but we are not completely done and we have more work to do. I appreciate him for that. As a shareholder, I love hearing that I have a leader of my company who isn't just like, clapping his hands together. I don't know if you can hear that from me and saying, all right, we did it. He's instead saying, we're going to keep our eye on the ball. We're going to keep working hard, much like Sean did. So we got some questions. Interestingly, there were no questions from analysts today. Not sure what that signals. Probably nothing, to be honest. But so Sean and team had some questions from us, the shareholders. So let's go through those. All right. So there was a question to Adam about tariffs. And so here's some of Adam's words on that. It's our understanding there are no final specific plans and there will be ample opportunity for discussion between the government and the industry, and we'll be paying close attention. So then you see here my note. I was like, yeah, exactly. That's how these things work. They'll get together, whether you want to call it a committee or just some kind of advisory group, and they'll all meet and discuss, and the studio heads and the, exhibitor CEOs and the Trump administration and whoever will be discussing, and they'll hammer this out. What I just believe, and I told you in the last video, is relax. This spells good things. The administration, I honestly don't, I'm going to say this politely. I'm not very focused on how anyone feels about this administration, as I say that the administration is signaling support for the movie industry. That's what I honestly believe this means, and this makes me very bullish for AMC. Enough about that. So just basically chill, guys. That's my point. AA then goes on. So excited about the partnership. I don't know what CJ is, but that must be the company behind the 40X and the ScreenX auditoriums. So he talked more about that. I don't remember what the question there was. I think it had just more to do with some of the Go plan. And then he's continuing to talk about the Go plan and references a theater in I'm going to see if I can pronounce this. I think he said Norwich. As an American, I want to say Norwich, but I think it's Norwich. You UK apes can correct me. And I don't know if I even spelled it right, but I did see, so there is a UK ape who I consider a friend who did post on X and posted, there's these seats that Adam's talking about. Basically, kind of these privacy pods for two, and this person posted them, and gosh, they're gorgeous. There's like these, cool lighting around them and very, beautiful and luxury looking seats. And you kind of, in a way, have your own little spot to sit with your significant other or your kid or your buddy or whatever. And so very cool looking. So he was kind of talking about that just as another example of some things AMC's been doing. And then he talked about, so all of this takes investment, right? So the Go plan, it's sort of like you spend money to make money kind of a thing. Now they are improving and you get an ROI. I've been in roles at Nike where I would help, build a business case for a project. And of course, if you can't get a certain return, then it's just a no-go. They've green-lighted these projects because they believe they're getting a return on them, and so far I see it. The premium seating, the premium screens show a return. And also, if you get people coming to AMC, like my teenagers, who now if their friends start saying, oh, actually the AMC is much nicer, I want to go there, now all the buddies and the teenagers go and stuff like that. So I see the wisdom in it. And so, but he's just saying, hey guys, we're not going to just go crazy and burn through our cash. That's what my words here, not him. He says, we're very disciplined in our CapEx spending. And so I was just making sure you all know that's the investment spending. Capital expenditures generally are something called depreciable. Like you can take basically a tax savings on them. So that's why you track them differently from something called operating expenses or OPEX. And so he's just saying they're going to be thoughtful about how much money they're spending on their investments and go at a reasonable pace. He shared some numbers there, but here's where we were. Maybe let me see if I had it in the next one. I don't know. I was driving again, and so I don't remember the exact numbers. I think he talked about perhaps we're somewhere a little bit of like between 100 and 150 million. I made up that number just now. Don't quote me on that. It could be wrong. And he said maybe we could increase by as much as 50 million a year. I'm sure I'm going to put myself in his shoes. What I'm doing is I'm watching those cash flows. I'm watching the industry turn around. And as my company starts having profits and now I have extra cash, there's probably some amount of that I'm paying down debt. There's some amount of that I'm storing away to just continue to have a healthy amount of cash. There's some amount of that I'm investing. And then you guys know that I would love to see AMC, perhaps put some money towards Bitcoin. But that will have to be Adam's and Sean's and team's decision on that one. So anyway, he's just saying, hey, they're going to be smart about the rate at which they're investing. And so you can see my note, he's got my full support that, he doesn't need my coaching on how to do that. They're doing a great job. He was just saying the investments so far have been driving increased profitability. And he's saying, hey, you can look forward to that's going to continue. So here we go again. Sean said it. Now Adam repeats. And this is just so bullish, you guys. We are generating positive free cash flow right now. Right now. There was a question of, hey, when can I look forward to AMC having positive cash flow? I want you to hear this again from Adam. And he actually used the word immediately. We are generating positive free cash flow immediately. Now, let me say it again to the shills. I told you so. So I want you again, if you're my followers, or even if you haven't been following me, really pay attention to the people who spread fear and focused you on cash burn. I honestly don't know. Forgive me if I'm missing other voices. I don't know anybody who was telling you April would turn us around and we'd be positive cash flows. And then Sean and Adam get on the call and tell you that's where we are. So, I've always told you guys, look for people with credibility and integrity. I got this right. And I love hearing it, though. It's so much more powerful hearing it from our management team confirming that we are in positive cash flows now. So that 378 million we came into the quarter with, April would have added to that. Love it, love it, love it. He goes on. This company will be free cash flow positive for the final 9 months of the year 2025. And basically then he says, hey, in 2026 is, even better. I am so happy, you guys. I probably should have turned on my camera for this because I am smiling a lot. All right, but let's keep going. So Adam says, hey, we're the industry leader in food and beverage per person amongst mass operators. So he was saying, let's not compare to somebody who maybe just owns, one theater and maybe runs it almost as a restaurant or something. But if you compare to like Cinemark, Regal, and some people like that, AMC is the industry leader in food and beverage per person. And he was talking about that was an investment also. We invested in the menu. We invested in thinking through where could we innovate. He says, hey, bars have gone from 100 to 350 during his time as a leader at AMC. So we more than tripled how many bars we have. We do have one at my AMC, and I'm gonna confess, yeah, sometimes I go pick up a beer to watch a movie and stuff, and my wife gets a glass of wine, and we enjoy that. And so he was also saying, by the way, you've seen the specialty movie themed cocktails, and he said those have been a big hit and have been doing very well. So that's been exciting to see. I'm almost done with these guys, and then we'll do a couple numbers here. They just rolled out the Dippin' Dots, so that was fun. I think maybe it's through Investor Connect. You guys can all correct me if I'm wrong. I think if you were part of Investor Connect, which, hey, plug here, sometimes we get free stuff. If you just go on AMC's website and basically give your email and say, hey, I own some shares, you can be part of Investor Connect. And I think so. My wife and I both are signed up on that, so we got free Dippin' Dots. And one time I was taking my boys to a movie. It was Minecraft, and we went and saw Minecraft. And so I used my wife's free Dippin' Dots for one of them, and I used my free Dippin' Dots for one. So they got that. I saw, by the way, too, AMC advertised today a new flavor, Hawaiian something. I'm obviously in time for Lilo and Stitch. Take a look at that. Go look at AMC's website. And so the Dippin' Dots, basically, Adam said, hey, we doubled ice cream sales. I didn't even think about it in real time. Ice cream. There's kind of certainly a decode for the GameStop apes. I'm not suggesting Adam necessarily meant that, but just kind of having fun with it. So anyway, we doubled ice cream sales just by implementing the Dippin' Dots. And I guess it makes sense. It's not like a lot of people are probably buying ice cream to watch a movie, but and Dippin' Dots are a nice, clean way to eat some ice cream, maybe a safer way. But so that's been kind of cool to see. This is really cool, guys. Check this out. The next thing, I don't know, out of nowhere, he just said, by the way, I had also even encouraged people today on X, hey, for the AMC call, there's Uber Eats for AMC at many locations. You could order anything off their menu pretty much and have it at your home while you listen to the AMC earnings call. So I was kind of pushing my followers that direction. And then Adam actually gave an update on it today. So we will do, hopefully I captured his point right. I don't think he said revenue. I actually think he said profit. We will do $5 million of profit on home delivery in 2025. That is amazing. I love that. So he affirmed that I think he just meant Uber Eats. I suppose you could say, well, did he also mean like merch or anything like that? But whatever. He said home delivery. Those are his exact words. $5 million of profit on home delivery in 2025. So we've been talking about expanding popcorn and expanding merch. I'm going to give you some merch numbers here in a minute because Adam did. But now home delivery, $5 million of profit in the year. This team is doing a great job. Oops, why is it? Sorry, I'm seeing people's comments. Here we go. I don't know why that flipped, but here we go. Okay, so, here goes the merch sales. So merch sales around 75 million in 2025. That's a nice big number. I'll have to look at how I forecast that. I guess I won't spin off on that, but so I don't know if I can tell you whether that's bigger or smaller or whatever versus my forecast. But the point is, look at, I didn't type it out, but he said, I want to say just a couple years ago, it was practically zero. I don't remember how long ago. Maybe he said 3 years. I don't remember. So forgive me, guys, on that one. But the point is, it's gone from almost zero to like 75 million this year. And he's saying, hey, that's basically a 50%. He said 50% contribution to EBITDA. So I'm kind of calling that gross margin, because you get taxes and some other stuff after that. So mainly the taxes. But that's a very profitable business is what he's saying. And we're doing 75 million in merch this year is his forecast. So that was cool to see. We're almost done. I think I just got 2 more posts on this. Just affirmed again, April had a massive surge in attendance. So there was a question around, do you expect us to keep having this rate of spending per person, in particular in food and beverage? And he said, well, logically, you would expect when we get way more attendance that you might start drawing in some attenders who don't spend as much when they visit. So he was saying, maybe we're going to average back down on the food and beverage spending per person. But what he said that's mega bullish is we did not see that in April. So we just had a really, really big April. We more than doubled last year, like I said, and like Adam told you. And the per person contribution, his words, stayed strong. So we didn't really see erosion there. So that was cool to see. Now, he was ending, so here's how he ended it. What you'll see out of AMC for the remainder of 2025 will be something to write home about. Love it. If we hit our forecasts, we're going to do very well and show dramatic improvement. Now, he said a lot more than that, but I was just sort of typing kind of figuring out what I could say as I drove, and I think I was distracted at that moment too. So just ended very bullishly. I cannot highlight enough. 9 months of positive cash flows, positive earnings. I'll share some more of my forecasts as we go. And in fact, then I ended with my final notes. I just love hearing him point us forward, flagging distorters who point you backwards or point at fear, calling positive cash flow for the combined 9 months remaining, highlighting massive strides in the Go plan and merch and home deliveries. Just has me so proud right now to be an AMC hodler. And we got this and we will win. And now I want to show you a couple things. First, actually, let me see if where do I have this? Okay, hang on, guys. We'll get there. Oops, there it is. Okay, so earlier today, I showed you guys this chart and talked about basically for every kind of dollar we make for every dollar at the domestic box office, how much does AMC make? And I said it's per million at the domestic box office, but it's really just dollar for dollar pretty much. So if there's $1 at the domestic box office, we make like last quarter, Q4, we made like 56 cents. Okay, so hopefully that's making sense to you. And so I just wanted to correct that. And so here's the thing, like if we use those numbers, what I've been telling you is we're going to set an all-time record. So as many of you have already seen the video from earlier today. If you haven't, go to that because I go to this in a lot more depth and share a few other things with you. But the point is, if we're like at a $2.9 billion box office, if we track, this is probably really small on your screen, so let me make this bigger. Oops. Just a minute. I don't know how DFE did this, guys. But, okay. So if we are at 2.9 billion at the box office, which I think we could even beat that. By the way, rumor mill. Somebody told me today that some Space Call hosts on X today, again, who pretend to be pro AMC, were talking about a 1.8 to 1.9 billion dollar box office this quarter. I don't know if I was fed misinformation or not misinformation. Sorry, it's from a good person. I don't know if the person was wrong. Or if that was really said today. But if that's true, I mean, again, proving the point that I'm telling you guys, you're surrounded. I'm not going to make that accusation because I wasn't there, I didn't hear it. But I don't know if anyone out there can confirm that, what I'll call Tweedledee and Tweedledum, we're saying 1.8 to 1.9 when I've got a $2.9 billion forecast and Adam's calling it a breakout quarter. I just don't want to level that accusation because if it's wrong, then they're gonna turn it around and say I did some false accusation or something. But just the point is, if that was true, then there's one more sign of people misleading you and all of that stuff. So sorry, I'm just on my other screen here. Okay. Okay, so anyway, if we're at the Q4 of 2024 levels of spending, we would have mega all-time record. To go back, like I said, look at my video I just did earlier today. If we're at Q3 of last year, level of spending, level of attendance really for AMC is kind of how we'd end up getting there. And the attendance is going to matter. I'm going to show you something in a minute. Then we would not quite hit our all-time record. The all-time record was 1.506 billion. It was in 2019. And then if we were at kind of our 3-year average of how much money we make for every dollar at the box office, then again, we would set a record. That's still $70 million. But now let me show you something. Everything kind of comes down to attendance. And here's why I was also really mega bullish off today. So we now have the actuals, right? And our attendance in Q1, let me just show you something. So if we go to Q3, what happened is we had a $2.6 billion domestic box office. Make this bigger for you too. Oops, that's not what I wanted. Okay, so we had a $2.6 billion domestic box office. And gosh, I mean, you can see like all these different tabs I have and all kinds of stuff I look at. Where are we? Q3 of last year. And we had 65 million people attend AMC globally. Now here was why that was a bummer. We've talked about this a lot, so don't let me accidentally, I'm not trying to be negative. I just want to share with you kind of what happened. We had a $2.6 billion box office the year before where we had 73 million people visit. Now here's one that's more in line. Q2 of last year, about 2.7 at the box office. We had kind of 66 million people visit. So either way, this box office here of this last Q3, I was using, if you can just see all these different box office quarters, and I have all the attendance, and then everything you're looking over here is actual. Anything in our past, these are actual numbers. I go and I take the AMC filings and I plug them in. And so what I'm just showing you is I will use our average. Like sometimes I'll use a running average, sometimes I'll use kind of just a more recent average. And if you go by any of these quarters or take some kind of average from these, then last Q3 we should have had way higher attendance. What was so great though is you can see here, at $300 million less at the box office, we're kind of in the range of almost the same amount of attendees. And so we bounced back. We had an uplift back to old rates of attendance in Q4. And I was not ready in Q2. So Q2 was a forecast, right? And I just shared with you guys earlier today, that, hey, we might break all-time records and all that stuff. And you can see my live forecast. Don't like stamp my name to this. This is kind of more of a live, and I want to refine it before I ever publish a forecast for you. That's why I have never shown you guys this stuff before. But right now I've got us at that almost 1.6 billion in revenue. But like I said, don't count on that. I'm not ready to kind of put my name to that. But here's the point. I have us, so you can see, I'll just even show you the math here. I took the average of Q3 and Q4. So what I did is if you add up the attendance and you add up the box office results, you kind of can come up with a rate of like per box office dollar, how many people come to AMC, right? So that's just all, it's pretty simple math. And then I had some things about, you can see the level of detail sometimes I track. I knew that Paddington was in the UK, but not in the US. So actually this number is a little bit high. So for a while there, I think I was multiplying this by I was lowering it, but things have been going so great. So the point is right now, I've just got us like, what if we kind of land squarely in between the low rate of attendance we had in Q3 last year and the much better rate of Q4. Now let me bring you to what we just learned today. We got great attendance for the size of the box office in Q1 that we just finished. This is now an actual. I was able to actualize this. We beat my numbers in attendance, which means then we also beat my numbers in admissions, and we beat my numbers in concessions, and we definitely beat my numbers in the other revenue. So I'm happy to tell you guys AMC beat all of my numbers on the revenue side. Now there's a few expenses that came in a touch higher. Like you can see now, rent went up by $4 million. So I'll start factoring that in and think through some other things. But happy to say our borrowing costs were lower than last quarter by $3 million. So that was cool. But I didn't mean to go through all these numbers right now. Here's the point. Watch what happens if I say, let's take last quarter divided by the box office. And let's say that I'm right and we're at this 2.918, basically 2.92 billion. And again, I told you today, if we get more upside in, say, Stitch and Karate Kid and Mission Impossible and 28 Years Later and Final Destination Bloodlines and on and on and on, right? How to Train Your Dragon. And if we get upside to a whole bunch of movies, we're going to have a crack at $3 billion at the box office. But if I just say, let's look at, here, hang on, before I show you that, let me even back up. Sorry, I'm probably making you crazy. Oh no, everything went to zero. Fixed. Control Z is your friend. Okay, so I'm using that blended average from Q3, Q4, right? And it says we're going to get 74 million people are going to visit. Watch what happens. If we say, well, the quarter we just finished, let's pretend we're going to keep that same attendance rate. I'm not going to do that as my forecast. I just want to show you a what if. But based on the current box office. So what I say, we're at like 74.4. Whoa! We jumped to almost 86 million people. That'd be a 12 million person increase in my forecast. I just showed you 12.5 million people, and it would take my forecast up a ton. And here's the problem. I have some other math in the way that I forecast. There's no way we're going down to $10 a person when we just closed Q1 at 11:30. Q4 was 11:56. Before that, we were at 11:43. So you guys see the level of detail I look at for us. We've been way above 11 for 4 quarters in a row, and 5 out of the last 6, and probably 6 out of the last 7, 7 of the last 8, 7 of the last 8 quarters well above. So here's the point. I'd have to go, because of the way I forecast, and say, well, I'm not going to only make $10 a person, so let me go change that too. And that's going to start to bring us up. The point is, let's undo that, Control Z, 74 million point four. Control Y, redo, 85.9. So on it, let's just look at, I think, yeah, this is, so I've got links, so it's not going to just, the point is, if you add 12.5 million people, well, we can just do it real quick. At 11, let's just mess with my spreadsheet, right? So equals 12.5 times, say it was more like 1140 a person. That'd be $142 million extra in admissions. Now, I'd have to go increase all of my expenses and a lot of different things, right? And I didn't even talk about food and beverage. So actually, here, hang on. So equals 12.5 times, what do we say, like 1140 a person, plus, let's use like $7, just $7 a person for food, okay? We'd have $230 million increase to my forecast. So I'm sitting here telling you, right now my forecast has us at an all-time record for AMC. Adam told you this is a breakout quarter for AMC. And if we have anything like the last quarter, from already record highs in revenues, I've got to add $230 million, and really more because it would increase our other revenue too. I don't even know, like I should pick up swearing or something, because I need a way to describe how crazy that would be, how big our quarter would be. So I'll play with some numbers. Maybe I'll do a future video for us all. And either way, the point is just mega, mega bullish. I love hearing Adam and Sean use some of the language I've used, and telling you, affirming to you that, hey, you know, I'm a dude on the internet, but now your CEO and CFO of the company are saying positive cash flows, positive earnings, breakout quarter, all kinds of good things. Time to celebrate, guys. Cheers. We will win. So let's go.